Good afternoon. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. The Israel-Hamas war has spooked equities market as much as people all around the world. Investors remain cautious, watchful of the global events with risk of sentiment grappling the Indian markets as well as broader markets elsewhere. Suyash Maheshwari joining us here in the studio. Suyash, give us a lowdown of how markets ended, not so surprisingly, in the red.
Yes, Shweta. So Indian markets continue to remain under pressure for the majority of the trade. Now, after opening deep in the red, we saw some bit of recovery in the early morning trade. Although by mid-morning, Nifty was seen facing resistance at about 19,580 levels, and from there on, the selling again resumed, and as a result, the index also briefly dipped below the 19,500 mark. And at close the index was down about 140 points or so, and closed just marginally above the 19,500 mark. Now Sensex also dropped by about 480 points in today's trade, and it also closed marginally above the 65,500 mark. Now broader market, Shweta, we are seeing some sort of selling pressure taking over there. They underperformed the Indian markets today. Both mid cap and the small cap indices were down about 1.5 to 1.7% in today's trade. And we also saw a spike in volatility. The India VIX spiked by about 12% and ended at about 11.55 levels. Now amongst sectors, Shweta, Nifty PSU Bank was a worst performer today. The PSU banking index fell about 3% in today's trade. Media stocks also fell about 2% in today's trade. Other sectoral indices that saw a loss of about 1% today were Nifty Bank. Now the Nifty Bank index also closed below the 44,000 mark, which was seen as a crucial support level for the index. Let's talk to Mohit Gang about more about it. Nifty Auto was also down by about 1%. Metal and private banks also, Shweta, fell about 1% each. Now, among sectors that outperformed the market but were also in the red today was the IT pack, the FMCG and the pharma pack. All three indices ended marginally lower but managed to outperform the market today.
All right, that's of course the lowdown. Majority of sectors ending deep in the red as expected, essentially a fallout of what's happening in West Asia, the Middle East as we call it. Mohit Gang, who is the CEO of Moneyfront, joining us on the broadcast at this point. Mohit, good afternoon. Thank you for taking time out. I want to begin by asking, we've seen global markets and Indian markets emanating what was expected, especially after an all-out war broke in West Asia. How long do you think markets are expected to remain spooked as much as they are? Can we see some sort of positive further development from tomorrow onward, the Tuesday trading session?
Hi, Shweta and Suyash. Look, honestly, I think it's an unfortunate and an unforeseen kind of a scenario which has unfolded over the weekend. And any kind of a geopolitical event, whenever it has happened in the past history also, markets have always reacted to that event some bit negative. However, it also depends on the longevity of those events. But I think history testifies it amply clear that whenever you have gone through a geopolitical event and a correction thereof, those have been great buying opportunities for the markets, and markets have like really rebounded back very, very emphatically. And the recent instances, or you go long back in the history and you track the data, and all will vouch for this very fact. Like when Russia-Ukraine war started last year, start of the year, markets initially corrected, but then the rebound was equally strong and fierce, right? And if you go back during the Gulf War days, which was in 1991, right? Even then, I think around 2021 odd days, market reacted very badly. But in the next year or so, market kind of gave a 30% gain from there on, right? And the history of this particular West Asia conflict, which is the Israel-Palestine conflict, in history there have been many instances where both the sides have come fighting at each other, and every time markets haven't reacted that badly. To be very honest, you've had seen some kind of a reaction, but the recovery has been fairly sharp. This time around, though, one can argue and make a case that the escalation seems absolutely serious and to a much larger scale and extent that what one has witnessed between these two factions in the recent history, right? So the scale and intensity is fairly serious, but I think the only risk is if from West Asia it spreads across to Middle East Asia, which is if somehow Iran comes into picture in this entire thing or the equation, that's when you can have some serious repercussions for the market, because Iran is one of the leading oil producers in the globe, and that could have serious escalation in crude prices, and which can perhaps create some havoc in the market. But as of now, I think market should start recovering from tomorrow or whatever.
Okay, so we will go to crude in just a bit because that's going to be an important discussion. But you're saying that this is a buying opportunity. This perhaps could be a short-lived scenario, and investors at this point in time should be looking at a buying opportunity here.
Shweta, if you get reasonable dips in the names on which you are tracking where the valuations are attractive or they become attractive by virtue of correction, yes, I think investors should look at those opportunities. Just by virtue of this event, I don't foresee a huge risk in the market. As I'm talking to
Okay.
you, I think the TA35 index, which is the Israeli market, is trading up. Honestly, right? If that market is trading up, is in the green, then it indicates the kind of confidence which market has in the underlying fundamentals of the overall global economy and so on and so forth. So my sense is unless the escalation is serious, it spreads out to Middle East, it spreads out to other countries. I think investors should still wait and watch. Nothing's going to change dramatically in next 3-4 days. But yes, wherever you find opportunities which are lucrative, you find fundamentally good stocks trading at reasonable valuations or at prices which you are looking at, then yes, investors should dip into those.
All right, fair enough. Let's go to crude because that's a conversation that a lot of analysts globally, nationally have been having for a while now. Crude, what is the immediate impact that you're looking at on crude prices? Crude prices are very, very volatile, touching 90 and over $90 a barrel as of this afternoon. Is the volatility further going to deepen as a result of this war? We know that neither Israel nor Palestine is an exporter of oil. What sort of impact are we looking at?
Oh, definitely. Both the countries don't export oil per se. The only big exporter, as I said at the start of the show, is Iran. And there are some linkages which have been found or which have been claimed around that Iran is kind of involved in backing the Hamas group. But my sense is if somehow Iran gets involved in the entire equation, or if US kind of makes the sanctions more stringent on Iran, or if there is a blockage from Iran side, something of that sort, that is when you can see oil soaring high. I think commodities is the first pack in any geopolitical tension you see across the world, whether it was Russia, Ukraine, or whether it is any other such kind of a conflict. Commodities is the first pack which will start shooting up, because obviously those are all countries in some form or other are either big exporters or importers of one or the other commodities, and that's what actually drives prices of many manufacturing companies across the world. So yes, crude will be impacted for a fair bit. My sense is I don't think so crude will ease off in a hurry or in a rush, even if the situation de-escalates. My sense is crude will remain on a boil for some time. Only risk to India is if it actually touches 100 and goes beyond that. That's when India actually starts bleeding a lot. And I think that is one scenario which every one of us will have to monitor very, very closely, because anything above 100 is not sustainable for India for a fairly long while.
All right, do you see crude touching 100 anytime soon?
Shweta, it's extremely tough to give a prognosis on commodities
Okay.
and crude. Look, honestly, geopolitical tensions can take it anywhere. But as of now, if Iran doesn't get involved, I think it should remain in this range.
No, it makes a
And
lot
what
of sense.
happens to, because Iran is involved one way or the other, there may be no official confirmation of that, or an Iranian government may not come on record to say so, but Iran is involved in one way or the other. What happens to inflation as a result of rising crude prices? Inflation is only going to worsen for a lot of developed economy, especially for the US. If crude gets any more expensive than $95 a barrel, it already touched 96, 97 in the past few weeks.
And also the supply chain disruptions that we'll see because of the war.
Totally. I think both the points are absolutely relevant. If I recall the numbers correctly, I think every $10 increase in crude prices leads to almost $1 billion of deficit, increased deficit in India's trade account, right? So that's a massive number, and this also leads to a huge inflation. The oil basket is the biggest basket in the overall inflation index, and that leads to the rising inflation. And yes, supply chain is one of the biggest things which gets disturbed. Iraq and that region is a major transport hub. The Haifa port recently, which was acquired by Adani Ports, is also one of the main centers out there. And overall, whenever these kind of things happen, I think the supply, the logistics part, the commodities, the crude, that region is extremely sensitive to it. Right. So I think the impact on inflation, yes, definitely will be negative. We'll have to see if this lasts for fairly long. Look, if this situation de-escalates within a week or 10 days or something, or even in a month kind of a scenario, then we are fairly okay with it, right? But if it goes beyond 3 months, 6 months, and a few other countries, neighboring countries get involved, if it goes to a serious proportion, then yes, there are ramifications from the globe for the
All
from the
right.
globe.
Okay, let's talk about supply chain disruption. Are you anticipating a similar impact as of the Russia-Ukraine war, similar to that when it comes to the Hamas-Israel war? Will that play out, or is there a very negligible impact as compared to a global war that we have been witnessing for a year and a half now? What sort of impact are you anticipating, given Middle East does not get involved in near term?
Look, if Middle East doesn't get involved in this thing, then the impact is fairly negligible. Honestly, I think West Asia is not a place or not a port which is a global what do you say a main transportation hub or something like that. So I think that's a fairly isolated kind of a territory or a region. So I don't think so. It impacts the overall logistics scenario across the globe. But yes, as I kept repeating on this show, if Middle East gets involved somehow, then I think the situation can get worse. But as of now, it doesn't look like that the Middle Eastern countries are getting involved in this, barring Iran, which also might not impact the global logistics or the supply chain per se, because Iran, any which ways, is a strictly monitored and a banned country. From a US perspective, they have a lot of restrictions on Iran, right? So it's not that Iran is a big hub, right? The other hubs which are larger are more towards the Middle Eastern side or towards the Saudi side and so on and so forth, or towards the Egyptian side, basically. So I don't think so. It impacts the logistics of the supply chain that much.
Mohit, what is your outlook on gold now? Do you expect gold to, kind of come into focus now? I mean, the gold prices have corrected to about a 7-month low, but we are seeing some sort of a uptick given that war-like situation has broken out in the Middle East currently. It's between Israel and Palestine. But if the situation escalates, where do you see gold heading from here?
You can never keep gold out of the equation, Suyash, right? I think any global tension, even a small whiff of it, will make investors flock towards the yellow metal. It's always been regarded extremely highly for its safety and security, and I think in times like these, people definitely tend, or investors definitely tend to move towards the yellow metal. Today, if I'm not wrong, again the gold was up around a percent and a half or so. And if the situation continues, I think we can see a up move in gold. It's already corrected a fair bit. But my sense is yes, if this situation continues, then you will see investors flocking towards gold.
All right, let's also
Difficult to
quickly.
give a range actually.
Okay. Okay, fair enough. Let's also quickly move on to some of the stocks that we are tracking, stocks that will have a likely impact, an immediate impact of war.
Yes, Shweta. So let's first look at Adani Ports. Adani Ports was among the worst, performers in the Nifty pack. The stock was down about 5% or so, and it is directly impacted because Adani Ports, as Mohit was also saying, owns Haifa port. And I was reading reports where it suggested that Israel may consider closing or may have already closed Haifa ports. Now that could be a major dampener for the stock. But at the same time, Haifa ports only contributes to about 3% of the total cargo volume for Adani ports. So perhaps the downfall may be limited to the kind of correction that we are seeing today. Other shipping and logistics stocks were also impacted, given that there is uncertainty regarding the fate of IMEEC, which is a Indian Middle East East European Economic Corridor. Now there are concerns that it could the plans to launch that IMEC corridor will take a backseat. And as a result, we were seeing some correction in the shipping and logistics company stock. Now, as we were talking about earlier in the show, that crude prices have seen a spike. The companies that are in the business of exploration and production of oil, such as ONGC and Oil India, surged today. Now they were ONGC was up about 0.41%, whereas Oil India gained about 0.53%. Now these companies, for them oil is the final product. So whenever the oil prices go up, their profitability improves and their margins also improve. So that's why we are seeing an uptick in those stocks. On the other side, downstream companies such as Indian Oil, Bharat Petroleum or Hindustan Petroleum saw some profit booking today. Indian Oil was down about 2.5%. Bharat Petroleum was also down about 2%. Now this is because crude is a raw material for these companies. They refine crude to make finished goods. So if the input costs go up, the profitability is also impacted. And as we see that these companies, OMC, oil marketing companies, have not been able to transfer that cost to the consumers. The price of both diesel and fuel has been has remained relatively stable in the course of the last 6-7 months. So any uptick in the input cost is a dampener for these stocks, and as a result we are seeing some correction over there. Now Asian Paints, Berger Paints, these are representative of the overall paint stocks which saw a correction today. Now paint, crude is a essential raw material for these paint companies. It accounts to about 30 to 35% of the entire inputs. So any surge in crude prices is negative for paint stocks. Also, this was the reason why some of the tire manufacturers also collapsed. As you can see, MRF and CEAT saw decent bit of correction. CEAT especially was down about 2.36%. The reason again being that crude derivatives are essential raw materials for these tire companies, and as a result we are seeing this sort of a correction.
All right, Mohit, from what we are looking at, all stocks related to oil are under pressure this afternoon. Does this mean that the markets are in fact anticipating crude to hit an all-time high, breach that $97 mark? If yes, this would wreak havoc not just for oil manufacturing companies, or rather OMCs and tire companies and all the other stocks. They could remain in news, in action for a while. Mohit, you are on mute.
Oh, I'm sorry. Yeah. So I was just saying, one of the key reasons why few of these stocks haven't done exceedingly well in this rally is all because of oil. Look, oil has continuously been on the boil for last year or so. Since in fact the Russia-Ukraine conflict, oil has been at a relatively higher level than what it has been historically, right? Now, the thing is, markets are always lead indicators, and markets will always factor in the risk first and the rewards later. So market has already factored in a price escalation in the oil. Oil has already gone up by around 4-5%. Brent has already touched $90. Will it go beyond 9500? That will all depend on the conflict and the duration of the conflict, and how far the conflict actually escalates, right? Otherwise, I think oil remains in this range, but even this range is a fairly steep range for at least the paint companies, the airline companies, the tire companies. Oil, as you rightly said, Suyash, is a key input material, right, which goes into raw materials or which goes directly into production. So all these companies will continue to remain under pressure for a fairly long bit. My sense is this situation won't ease off immediately, even if the scale of the war reduces, but the situation won't de-escalate, as it was very clear from what the Israeli side spoke yesterday, that be ready for a long war. That was the statement which came out, right? So my sense is this will go fairly long, honestly, and I think oil will continue to remain hot. for next 2-3 odd months. Whether it crosses 100 or not is a different matter. If it
Right.
does, then yes, these stocks will be extremely under pressure. And my sense is investors should just stay away from these stocks as of now.
All right, looks like
And
investors are spooked at the moment. Oil marketing companies also trying to factor in what could be a larger impact of high oil prices in days and months to come.
yes, Mohit, before we let you go, I just want to get your view specifically on Adani Ports, a kind of correction that we saw today, 5% drawdown in the stock prices on reports that Haifa port may be or could be shut down in the near term. What would your advice be to investors? Should they wait on the sideline given that the concerns are still there, and if the port is in fact closed, it could be a major dampener for Adani Ports?
Look, honestly, Suyash, I think the Haifa port is more towards the Lebanon and Syria side. If you see the ports across the the Israeli coastline, Haifa is the last port and is the farthest away from the Hamas region, or right. So my sense is that port is still quite safe from the war zone, typically, which is right now, unless the war front opens from the Lebanon side and the Syrian side also, which can't be ruled out. Honestly, I think the Lebanon side has also started boiling a little bit, as I read in the newspapers. But my sense is that is still farthest away. Plus, the contribution of Haifa to overall Adani is only, I think, 2%, which or 3% maybe, which has just come out. Right. So my sense is it shouldn't be impacting the overall stock that much. But yes, the sentiment is sentiment, and I think not just Adani Port, but even the new listing, the JSW Infra was down. The port's stock was down almost 5%, which doesn't have any linkage to that region specifically. But even that stock was hammered badly. So my sense is just the market and the sentiment, which tends to react a bit sharper in these cases.
All right, Mohit, we'll get you back as soon as we can. This is a big story that we continue to track all details, of course, here on News9. Thank you so much for taking time out.